first one I want to start talking about is RESPA. RESPA, a few things I want you to know about RESPA. Again, RESPA stands for the Real Estate Settlement Procedures Act, RESPA. Real Estate Settlement Procedures Act. RESPA deals with 1 to 4 unit residential property. 1 to 4 unit residential property. Another name that they may use for residential property is owner-occupied property. Don't get it wrong because they said owner-occupied instead of residential. 1 to 4 unit residential property. The owner has to stay in one. It's okay that it's a duplex or a triplex or a fourplex. As long as the owner stays in one, then they're governed by RESPA. You'll notice that everything on this test has to do with residential property. They don't care about investment properties if it's more than 4 or any of that. This is because people were losing their homes. This is about homeowners. Okay? So RESPA deals with 1 to 4 unit residential properties. RESPA deals with settlement services. Anything having to do with settlement services, things needed to close escrow, is going to be under RESPA. Now, the purpose of RESPA is to help consumers become better shoppers for settlement services. To show them all of their options when it comes to settlement services. It is also going to deal with things like kickback, referral fees, things of that nature that we'll be talking about shortly. There's 4 sections of RESPA that you need to be concerned with. There's several sections of the RESPA law, but for the exam and for the CFPB, there are 4 sections that they specifically want to make sure you understand. And that's section 6, 8, 9, and 10. They skipped 7 for whatever reasons, but these are the sections that you're going to be responsible for making sure that you have information on. Section 6 deals with mortgage servicing. Mortgage servicing. Understand what a servicer is. A servicer may not be the owner of the loan. They're just servicing the loans. Servicing means they're taking the payments, paying the taxes and insurance. When I first got my house, it was with IndyMac. And then it went to Aqua, and then it went to Greenspoint. The people that own the loan, the actual investor didn't change, but where I made my payments changed because those were the servicers. Section 6 deals with mortgage servicing and mortgage servicing abuses, all the things that the servicers were doing wrong, like not applying your payments on time, like not paying your taxes and insurance on time, things of that nature. So Section 6 deals with mortgage servicing and mortgage servicing abuses. Section 8, which we'll get into details later, prohibits kickbacks, fee splitting, and unearned fees. Section 8 prohibits kickbacks, fee splitting, and unearned fees. Referral fees, splitting your money with unlicensed people, taking money up front. Section 8 deals with that kind of stuff. Section 9 talks about title insurance. This law is broken every single day, so we'll get into detail about it. Section 9 deals with title insurance. States that the seller cannot require the borrower to use a particular title company. And many brokers try to do this all the time, so I'll tell you about that shortly. And Section 10 identifies the amount that can be charged into an escrow account. We talked about escrow accounts earlier. It's where the bank takes the money to put for your taxes and insurance. They escrow it or impound it, or they create a reserve account. So as far as RESPA is concerned, those are the 4 sections that you need to know like the back of your hand, in and out. This is a chart that tells you, I told you RESPA deals with settlement services. This is a chart that tells you what's considered settlement services and what isn't. What's considered settlement services, things like origination, processing, federal fees, title, and things that are not considered settlement services. Now again, RESPA deals with 1 to 4 unit residential property. Another name for residential is owner-occupied. The owner has to stay in one. Now, RESPA does not deal with, and pay close attention, RESPA does not deal with all cash sales. So even though they stay in it, if they paid all cash for it, they're not governed by RESPA rules and regulations. They don't have to follow RESPA rules and regulations. RESPA does not deal in what's called a seller carryback loan. RESPA does not deal in rental property transactions. If it's all rented out, it may be a 1 to 4 unit, but it's all rented out. They don't have to go by RESPA rules and regulations. Property of 25 acres or more. Make sure you understand if it's called property of 25 acres or more, it's called agricultural property. They may not say the 25 acres or more. They may just say the word agricultural property, where you're supposed to understand that that means it's on 25 or more acres. Vacant land, commercial, temporary financing. You'll get questions that say, which of the following is covered by RESPA, or which of the following is not covered by RESPA? Danny has a triplex. He stays in Unit A. Is that covered by RESPA?
Yes.
Yes. Sally has a single-family home that she rents to her mother. Is that covered by RESPA? No. It has to be owner-occupied. Susan owns a 10-unit apartment building, and she stays in Unit 1. No, because it's more than 4. You get that?
Yes.
Owner-occupied, they have to stay in 1. Now, again, RESPA Section 6 deals with mortgage servicing and mortgage servicing abuses. RESPA Section 6 deals with mortgage servicing and mortgage servicing abuses. A mortgage servicer is the company that takes the payment for the taxes and insurance. Okay. Section 8 deals with kickbacks, fee splitting, and unearned fees. Section 8 deals with kickbacks, fee splitting, and unearned fees. Prohibits giving or accepting. The person accepting the gift is just as guilty and will be fined just like the person giving it. Okay. Kickback, fee splitting, unearned fees, anything of value. Doesn't have to be money. You gave me a Gucci purse because I gave you some referrals. We're violating Section 8 of RESPA. You gave me RAM tickets. That's a violation. Anything of value. You gave me a water bottle with the title company's name on it. That's fine. You gave me pens with the title. That's fine. Anything of value. A mug. You have to use your judgment. Okay? A mug with the title. That's more of promotional items. Go ahead.
Could it be a gift card?
A gift card is of value. That's just like money. So no.
I thought it was $25 for this.
On the exam, they don't put an amount to it. They just say of value. Okay. Also prohibits fee splitting. What is fee splitting? Fee splitting is splitting your money with an unlicensed person. For example, and people do it every day, you're going to get caught. Okay. You have a loan. You have a client. You don't have your license, so you can't do it. So you say, Artricia, can you do the loan? I'm not licensed. This is my friend, my cousin, my aunt. They need a loan. Okay? I can't do it because I'm not licensed. Can you do it? I do the loan. I get paid through Escrow the correct way. You found out I got paid, so now you want me to meet you at Starbucks to give you your half. You don't have a half. I can't split my fee with you. That would be considered fee splitting, and it's a violation of RESPA Section 8. In mortgages, I'm not talking about real estate. In mortgages, you cannot split your fee with an unlicensed person. To get paid on mortgages, you have to have an NMLS endorsement. You have to be licensed. Do people do this every day? Yeah. Just like people run the red light every day, run the stop sign. But you can't say after you got this license that you didn't know. Oh, that's wrong. I can't do that. Yeah, you know, because you have an NMLS license. You took the class. You took the test. You can't say you know. Fee splitting, if I did that, then I would be violating Section 8 of RESPA. The other thing, receiving unearned fees. 2 other words that they use for unearned fees are upfront fees and advance fees. You can't get paid upfront for a mortgage. Yeah, I'm going to charge you 2 points, but if you give me $600 now, I'll take it down to this. You can't do that. How do you get paid in real estate and mortgages? When the deal closes. You cannot take upfront fees. What law are you violating if you take anything upfront as a form of payment? Section 8 of RESPA. Section 9 prohibits the seller from requiring the home buyer to use a particular title company, underlying title company, as a condition of the sale. This is one that people argue with me about, and I'm just saying I didn't make the law. I'm just telling you what the law is, okay? Prohibits the seller from requiring the home buyer to use a particular title company as a condition of the sale. You cannot make them use a certain title company. Does it mean it can't be on the form seller chooses title? Yeah, that's fine. Does it mean you can't say seller chooses title? That's fine too. As long as the borrower doesn't say, I don't want to use that title company. And again, it only deals with title. Okay? I had an instance where my borrower looked at it and she said, absolutely not. I don't want to use that title company. I had to go back to the other broker and says, do you have another title company? She doesn't want to use this title company. Well, he was upset. What do you mean she doesn't want to use this title company? Seller chooses all services. Well, that applies to just about everything except for title. So as far as title, do you have another title company? Well, what's wrong with the one that we use? We've been using them all the time. I didn't say anything was wrong with them. I just said she doesn't want to use them. Do you have another one, or I can help you find one? Well, if you don't use our title company, we're not going to sell you this house. And I had to say, well, you can't really say that. Yeah, because seller chooses title, blah, blah, blah. I said, well, you know what? You're getting really close to violating Section 9 of RESPA. He said, well, I don't know what the hell that is, but let me just tell you this. If you don't want to use our title company, we're not going to sell you this house. So I had to go back to the bar and says, he doesn't know the rules. He's insisting that you use this title company. For whatever reason, you have to make a decision. Either you're going to use it, and we go through with this, or let's go find another house. She said, I don't want to lose the house over this. Fine, go with it. It went through. The deal was fine. Not even a big deal. I didn't say anything was wrong with the title company, but I'm on the side of my borrower. She didn't want to use it. I had to tell her. But after it was all done, I gave her the emails, because we were communicating through email, where he specifically said, if you don't use this title company, we're not going to sell you this house. So what did he do? He made it as a condition of the sale, which allows the borrower to go back and sue for 3 times the amount she paid for title insurance. So they're going to ask you that. What law allows the borrower to sue for 3 times the amount paid for title insurance? RESPA Section 9. Another name that they use on the test for 3 times the amount, treble damages. So they may even ask you what law allows the borrower to sue for treble damages. RESPA Section 9. RESPA Section 10 sets the limit on how much the lender can make the borrower put into an escrow account. Sets the limit on how much the lender can make the borrower put into an escrow account. We talked earlier that an escrow account is the account they set up to pay the taxes and insurance. It used to be a time where they would say, oh, well, we want the taxes and insurance for the first quarter or the second quarter. But the CFPB said, no. Why are you taking so much up front? You can only take 1/12. Why 1/12? Because there's 12 months in a year. So each month, they can only take up to 1/12 to put into the impound account. With January, yeah, go ahead and take my January portion. With February, yeah, go ahead and take my February portion. But before, they were saying, oh, it's January, we want all the money for the first quarter. Oh, it's April, we want it for the second quarter. CFPB said no. Each month, you can take no more than 1/12. Just take that month, nothing up front. Now, that's with each month with their payment. They also said at closing, meaning at doc signing. Because then people tell me, but I've seen them when they sign docs, they take a whole bunch of taxes and insurance. That's not the monthly escrow. Okay? I mean, that's not the monthly taxes and insurance. At closing, they can take a cushion of up to 2 months. They're going to ask you, how much of a cushion can they take at closing? So when the notary comes with their docs, they can take the next installment of taxes due, but they can also still take a cushion of 2 months. They're going to ask you on the exam, what is the maximum amount of the cushion they can take? 2 months. And sometimes they refer to the 2 months as 1/6. Also, under RESPA Section 10, I asked you guys earlier how many of you own a home that have escrows. Each year, RESPA Section 10 requires that they do what's called an annual escrow account analysis. They have to give you a statement that says, this is how much we took every month. This is when we paid your taxes and insurance. Okay, that's called an annual escrow analysis. What law says they have to do that? RESPA Section 10. How often do they do that? Annually, meaning once a year. And if they took $50 or more too much, then they have to give it back. So they're going to ask you, at what point would they have to return any funds if they took $50 or more too much? So, RESPA Section 6, 8, 9, and 10. You need to know those like the back of your hand.